Investing in stocks can be a powerful way to build wealth, but many people get it wrong. They try to time the market. They buy and sell too often. This is a mistake. The real secret to making money in stocks is simple. Stay invested for the long term. Long-term investment means buying stocks and holding them for years, even decades. This approach has many benefits. It allows you to benefit from compound interest. Your money grows on itself over time. It also reduces the impact of short-term market swings. These can be scary, but they don't matter much in the long run. When you invest for the long term, you're betting on human progress. You're betting that companies will innovate, that they'll find new ways to create value. History shows this is a good bet. The stock market is like a roller coaster. It goes up and down. Sometimes the drops can be scary, but here's the secret. If you stay on the ride, you'll likely come out ahead. The key is to not panic and jump off when things get rough. Short-term market fluctuations are normal. They happen for many reasons. News events, economic data, or even just investor sentiment can cause them. But these short-term movements don't usually reflect the true value of companies. They're more like noise. The signal, the real growth of businesses only becomes clear over time. When you stay invested through these fluctuations, you benefit in several ways. First, you avoid the temptation to sell low and buy high. Many investors make this mistake. They sell when the market drops out of fear, then they buy back in when it's high again. Investing isn't just about numbers. It's about psychology. Your temperament, how you react to market events, can be more important than your intellect. The most successful investors aren't necessarily the smartest. They're the ones who can keep their cool when others are losing theirs. Good investing temperament means several things. It means being patient, not expecting to get rich overnight. It means being disciplined, sticking to your investment plan even when it's tempting to deviate. It means being rational, making decisions based on facts and analysis, not emotions or hunches. Perhaps most importantly, good temperament means being contrarian. When others are greedy, be fearful. When others are fearful, be greedy. This is easier said than done. Section 4. Warren Buffett's Wisdom on Staying Invested. When it comes to long-term investing, few voices carry as much weight as Warren Buffett's. Often called the Oracle of Omaha, Buffett has built his fortune through patient, long-term investing. His wisdom offers valuable insights for all investors, especially beginners. One of Buffett's most famous quotes is, "Our favorite holding period is forever." He doesn't buy stocks to flip them for quick profits. He buys great businesses with the intention of holding them for the long haul. This approach has served him well. Berkshire Hathaway, his company, has outperformed the S&P 500 significantly over the decades. Section 5. Advice for beginner investors. Keep calm and stay in. If you're new to investing, it might seem overwhelming. The stock market can be complex. Even the greatest investors started as beginners. Start, learn, and stick with it. Educate yourself, read books, follow reputable news sources, learn different strategies. Don't get paralyzed by information overload. You don't need to know everything to start. Build a solid foundation and build on it over time. Start small, but start now. You don't need a lot of money. Many brokers allow small amounts. Get in the game. Time is your greatest ally. The sooner you start, the more time your money has to grow. Develop your temperament. Practice patience. Don't panic when the market dips. See it as a potential opportunity. Remember, you're investing for the long term.